Next we come to a very interesting section on future developments. Where is Ashworth Lea likely to go? And there are two big forces that impact not just Ashworth Lea, but the entire car manufacturing industry. And they are the development of alternative fuels and the development of self-driving technology. And these twin forces represent a real challenge for Ashworth Lea, I would say, in particular, because we're talking about a traditional company, a conservative company that is specialised in hand-built motors. Does it have the technological capability in-house to really make a go at the development of alternative fuels and self-driving technology? I really am not so sure it is well placed to do that. Nevertheless, the Dom Motor Group and the INV Group are really pushing Ashworth Lea to go into these areas and to make some waves here. Maybe Ashworth Lea is being forced to innovate. So some traditional manufacturers are actually setting up disruptive subsidiaries. I can think of Ford, which recently established a self-driving division that was separate and acts as a separate subsidiary from the Ford company. In this way, a traditional car manufacturer can develop a standalone company that is more innovative and perhaps less bound to the usual way of doing things that might sort of infect the atmosphere in the main company. And that's what Ford is betting on. So we're talking here about disruptive technology. And that word is telling, because Ashworth Lea is perhaps not a company that you would associate with that term, disruptive. Ashworth Lea is traditional. Ashworth Lea is conservative. Ashworth Lea and disruptive, I'm not so sure. So we're told next that disruptive technology and technology trends have the potential to fundamentally change the relationship of the consumer and the car. And by 2030, it's estimated that 15% of all new cars will be absolutely self-driving, fully autonomous, and a further 50% will be highly autonomous. This technology is already present and being tested on the roads, particularly in the United States, with a number of companies leading the way there. And already we have intelligent cars that are rigged out with high-end software, cars that communicate with one another and that are becoming smarter and smarter and moving towards becoming fully autonomous. So technical capability for these cars, it already exists, and they're already self-driving cars, as I say, being tested on the streets of some countries. Software competence is recognized as one of the very important differentiating features in the industry. We're talking here about a great deal of complexity. We're told that the program code in the modern car has as many object functions as an aerospace flight control system. Again, I would ask the question whether Ashworth Lea is well placed to flex their software strength, their competence in this area. I would doubt that it has this expertise in-house. So they're talking maybe about partnerships and tie-ups with companies that do have this software expertise. High-tech companies are entering the market. We think of Google, Apple and Tesla. Some of these, like Tesla, are well established. Google is testing self-driving cars. There were rumours of Apple testing vehicles as well and looking to enter into this particular consumer segment. So the established car manufacturers, they're going to have to adapt to the changes that are coming on the scene. They're going to have to differentiate their products and services. This is particularly important because customer loyalty is not what it was. People are less loyal to specific brands. That's going to hurt Ashworth Lea. They need to enhance the value proposition. They're no longer just hardware providers. They're integrated mobility service providers. That's a little bit of a mouthful. we're talking about very sophisticated technology enhanced transport systems. So Dom and the INV group, they're giving a lot of technical advice, and I find this term interesting that to a certain degree they're giving financial support to Ashworth Lea. So they're pressuring Ashworth Lea to move in the direction of self-driving technology and alternative fuels, and they're saying go ahead with that, but we're not going to overdo it with the financial support. They know these are risky areas, and it seems to me that they're nudging Ashworth Lea in the direction of these risks, and they want them to take the big risks, but maybe they're not so happy to put their money where their mouths are. Volumes for newly developed self-drive cars, there are some being developed, we're told, by Ashworth Lea. 50 units they want to produce in 2017. So very low volumes, but they're pushing ahead with this technology. And the INV group is expressing its support in particular for the development of a hydrogen supply network in mainland. So this is an alternative fuel rather than relying on petroleum for its fuel. They're looking to develop hydrogen fuel cell technology to power these vehicles. And we're told about a very supportive mainland government which is very interested in developing alternative fuels. They have no natural fossil fuel resources themselves. They've encouraged big investments in solar power and wind power, so they're eager to exploit this new power. So the government is potentially a very important stakeholder in this case. We see time and again that the government is popping up. It's influencing purchase and investment decisions. It's regulating emissions, and it's going to be a key player in this industry. And then we're told in the last paragraph of this section that we're reminded that these are globally desired vehicles. The fact that Ashworth Lea is present globally and has all of these dealerships, risk is diversified to some extent, but there are still many risks on the horizon for Ashworth Lea to contend with. Thinking then about the key points we've just seen in the future development section, I asked the question whether Ashworth Lea is not being dragged kicking and screaming into the future. Maybe they're an unwilling participant in these experiments that the INV group and the Dom Car group want it to carry out. Alternative fuels and autonomous vehicles, these are the twin forces shaping the future of the auto industry, the big trends. The INV group is pushing for alternative fuels and is collaborating with the mainland government to develop those. And the Dom Car group is pushing Ashworth Lea in the direction of autonomous vehicles. They're already planning the production of autonomous vehicles in 2017. So that is a risky bet. The government, as we saw, is a very important player in this industry. The mainland government is regulating emissions, trying to keep pollution to a minimum. They are setting an ambitious energy agenda with the development of alternative fuels in the form of solar and wind power. They're pushing for hydrogen cell fuel technology as well. They're incentivizing purchases and investments in these directions. They're a key player. Now we come to the industry section, where we're going to see some of the key trends that have played out over the last few years in the global car industry. So we start with the sales figures over the last 4 years, from 2013 to 2016. And we see the evolution of sales of new cars. And it's interesting to note that between 2015 and 16, we had growth of about 5.4%. That's about an increase of 3.9 million new car sales. And when we see the split by region between Asia, North America, Europe and South America, it's evident that Asia is the principal driver of this growth. Between 2015 and 16, Asia grew by 9.9%, so it was accounting for about 3.3 million of those 3.9 million new car sales. So the weighting per region is very much stacked in the favor of the Asian market.